Okay, so sa mga nagkamali dito sa instruction na to, okay lang yun. I-check ko naman isa-isa yan. Pero as much as possible, sundin nyo to kasi sometimes hindi talaga binabasa ni Google Forms, lalo na kung hindi siya nakalagay sa default answers. Okay. So, start dito. Which of the following statements are true? So, ang true lang dito is ito. Ang mali dito is baliktad. Dapat entity liable is identified and yung payee is not identified. So, yun lang yung mali dito. Baliktad siya. Then ito, liability arises from past and determinable event, hindi future event. Okay? It's either past event or current event. Basta hindi siya future. And dito, ang mali dito is ito. Hindi siya dapat inflow. Dapat siya ay outflow. Because liabilities are meant to be against the company. So, unfavorable para sa company. So, that is not inflow. It should be outflow. And ito lang yung tama. Remote liabilities only require disclosures. Okay, so for next question dito. So, bali, responses. Ito pala. So, marami naman naka-perfect. Halos kalahati. May 9, may 8, may 7, may 6. Para dito sa 6 and 5, bawi next time. Passing grade kasi sa quiz na to is 7. Okay? So, actually, dalawa lang pala sila, 5 and 6. Okay, next is check the following statements are false. So, ito siya, false. So, ang naging false dito is ito. Dapat siya ay... Okay, sorry Estimated liabilities are obligation which exists at the end of the reporting period and their amount is indefinite. So, since estimated siya, the amount is not yet defined. Okay? So, dapat indefinite. Hindi pa siya defined. So, that makes this statement false. But the rest are correct. So, next, tamang sagot dito is 750,000. Bakit? Sabi natin, the entity planned to refinance the note by issuing long-term bonds because the entity temporarily had excess cash. It repaid 250 on the note on January 15th. And in February 21st, the entity completed a 1.5 bond offering. Entity will use the bond offering proceeds to repay the note on maturity. On March 31st, the financial statements authorized to issue what note payable should be included in the liabilities. So, ito lang. 750,000 lang. The rest are irrelevant because, again, planned pa lang, nothing is executed. So, magulo lang itong mga ito. Okay, next. Short-term obligations are reported as non-current if the entity has a long-time credit line. So, doesn't matter kung meron man, basta hindi naman yan exercise. So, it should remain as current. The entity has plan, again, plano pa lang yan. So, still current pa rin siya. The entity has the discretion to refinance on long term. Yes, non-current siya in this example. And dito, the entity can negotiate for the grace period. Again, negotiation is not yet done. So, all of these are planned. Kaya non-current pa rin siya. Okay, question dito sa mga ito. Mag-message lang kayo kung may question ha. Okay. So, which of the following represents a liability? So, ito, the obligation to favor with expects to order from supplier next year. So, next year pa, and expects pa lang, so nothing is executed. So, hindi siya liability. Obligation to provide goods that customer have ordered and paid for during the current year. Okay, so liability siya. Okay. Yes, kasi if you order it, then liability will arise and you have just paid it within the year. So, hindi na dapat mag-exist ng liability na to. But, again, liability existed at this point. Kung in-order mo na siya and dumating na siya sa vicinity mo, then liability na yan. Obligation to pay interest on a 5-year note payable that was issued the last day of the year. So, hindi pa siya nag-accrue ng kahit anong interest. And December 31 mo pa lang siya na-receive. So, interest is not already accrued at year end kasi last day mo na siya natanggap and last day siya issued. Okay? Obligation to distribute entities own share through salary deduction. So again, with the liability, this is an equity transaction, issuance of uh, securities or share of stocks. So, hindi siya liability. Okay, next, which does not meet definition of a liability. Okay, the rest are liability and ito, hindi siya liability. If naalala niya si Mr. J, sa ating example, so siya yun. No. Mr. 1 yata yun. Diba? So next, the entity has a loan due for repayment in 6 months, but the entity has the option to refinance the repayment in 2 years instead of 6 months. The entity will refinance this loan after the reporting period, but before the issuance of FS. In which section of the FS should this loan be presented? Again, it should be non-current liability because the refinance is refinancing it after the reporting period, but before the issuance of financial statement. So, for it to be a current liability, dapat refinancing should be on or before the reporting period. Okay. Next, at year-end, the entity classified a note payable as current liability under what condition? What condition could the entity reclassify the note payable from current to non-current? So if the entity has intent and ability to reclassify the note before the end of the reporting period. So current pa rin to. Okay. Pakisabi kay Mr. Estrella, ano to? Emergency naman. So okay lang. No problem. Basta ganitong mga sitwasyon na mas priority niyo yung ano niyo, family niyo. Been there. So naiintindihan ko. Okay lang yun. No problem. Okay. So pakisabi na lang sa kanya, no? Okay lang. Siya mag-alala ka mo. So next is if the entity has executed an agreement to refinance the note before the issuance of the financial statements. Executed an agreement to refinance the note before the issuance of the financial statements. Yes, but hindi naman sinabi dito na after the reporting period. So probably just to make sure this is an adjusting event, so we can consider it as current. Kasi before the issuance of the financial statement. But as to uh, timing, should be current. Yes. Mm-hmm. For the issuance of the financial statement. Okay. So I think we have to stick to dito na maging current siya. See, the problem is silent as to okay. By default pala siya as current liability. So kaya pala. So additional lang to na may agreement siya to refinance the note before the issuance of the financial statement. So it is too late na. Kasi it is classified as current and the refinancing is before, but we can presume na after ng reporting period kasi na-classify na siya as current. Okay. So next is if the entity has intended ability to reclassify the note before the issuance of the financial statement. Again, current yan. And this one, if the entity has executed an agreement to refinance the note before the end of the reporting period. Entity has executed an agreement. Okay, so ito yung magsasatisfy dito kasi he is planning to refinance it from current to non-current. So ito yun. Ito yung pwede natin i-consider kasi he's executed an agreement to refinance the note before the end of the reporting period. So this is the best answer. Okay. Question. Okay. So next, when a customer advances has been previously received and the goods have been served already, the appropriate journal entry is, so ulitin natin, when the customer advance has been previously received, so nakapag-entry ka na ng cash and customer deposit, and the goods have been served already, the appropriate journal entry is, so again, customer deposit is a liability. So since yung delivery is already been served, so you have to recognize na siya as revenue, which is ito, close the customer deposit and recognize revenue. Okay, so itong transaction na to is as if kaliwaan, you deliver the goods and the customer pay it, so this is the entry. Ito naman, if you will reclassify yung revenue from revenue to liability in case of year-end adjustment for unserved orders or unserved goods. So ito yung entry natin. And ito naman, if there's a refund, makikita nyo, di ba? I-close natin yung customer's deposit, then we will give back the cash. So refund ito. Okay, next, what is the classification of debt callable by the creditor? So, alam naman natin to, current liability siya lagi. Okay, exemption siya. Though equity instrument siya, pero pag may issue siya, is a current liability due to its callability. Okay. So, I think proceed na tayo sa chapter 2. Okay. I'm sorry. Sir, ano po yung best way para ma-distinguish kung current or non-current? Actually, madaming way para ma-identify mo siya. Depende sa kung ano yung available na details. Okay? So, ang una mong kailangan gawin is i-check if there is, kung meron bang agreement between the party na yung liability can be refinanced on a long-term basis. Okay? So, kung the company has the ability to refinance it on a long-term basis, then unconditional right to refinance it on a long-term basis, then the liability should be non-current, provided na yung agreement and yung ability to refinance it happens on or before the reporting period. Okay? But if the agreement is executed after the reporting period but before the issuance of financial statement, it should be still a current liability. Okay? So, dito kasi, ang pinaka-purpose ng presentation na to is to identify yung liability if it is current or non-current, not because the amount is huge, kung malaki ba yung halaga, maliit lang ba. Ito kasi is yung kung kailan mo siya pwedeng bayaran. So, let's say, ah, may utang ka sa bangko, pero meron kang kakayahan na bayaran siya on a longer term. So it should be non-current. Okay? But again, if usually, yung mga bangko naman hindi naman nagbibigay ng gano'ng option. So kung kailangan mo siyang bayaran within the year, so you have no unconditional right para mag uh, settle on a long-term basis, then it should be current. But if that right is present, then pwede mo siyang i-exercise and pwede mo siyang bayaran on a long-term basis. Which is, when I say long-term, it's more than 12 months. So, ganun lang siya. Check mo if pwede po ulit yung about current to non-current and yung NCLTC. Nakalito po kasi. Alin doon? About current to non-current and yung non-current liability to current liability po. Parang yun na yung na-discuss ko kanina about dito sa tanong na to. Okay, so sige. Balikan natin. I-review natin. Ito, yung sinasabi nating refinancing agreement. Okay. So, refinancing agreement. So, a long-term obligation that is maturing within 12 months after the reporting period is classified as current, even if a refinancing agreement to reschedule on a long-term basis is completed after. Remember, after. So, meaning if even meron kang refinancing agreement to reschedule the payments on a long-term basis, but na-exercise mo lang siya or na-complete mo siya after the reporting period, but before the financial statement is authorized for issue, it is still current. Okay? Okay? So, however, the obligation is classified as non-current if the entity expects and has the discretion to refinance it on a long-term basis under the existing loan facility. So when we say existing loan facility, it is already existing before the end of the reporting period. So if the refinancing is not at the discretion of the entity, so wala sa discretion niya na babayaran siya on a long-term basis, which is nasa creditor usually, even though may agreement kayo, but the discretion is not on you, nasa creditor, we should still consider it as a current liability. Okay? But if the entity has the discretion, then you can classify it as non-current. If the refinancing is not a discretion of the entity, ito na nga yung sinabi natin, it should be a current liability as of year end. Okay. So ano ba yung refinancing? So refinancing refers to the replacement of an existing debt with, wait lang, kaharang. Ito. With a new one but with different terms. Example is extended maturity. So yun yung purpose ng refinancing. Okay, so ito yung about sa refinancing ha. Pero hindi lang ito yung reason para ma-distinguish mo siya as current or non-current. What else? Example na lang ito ng refinancing. Hindi siya nakalagay dito. Anyway, so ito na lang muna yung sa refinancing na lang muna yung focus natin. Okay, so ito yung Q ulitin natin one more time. So it is still current if refinancing agreement to reschedule the payments on a long-term basis is completed after the reporting period. Meaning, when we say reporting period, it is December 31. Usually, yun yung end of reporting period natin. So, meaning, after the reporting period is January 1 onwards, di ba? So, if that agreement is reached after the reporting period, which is January 1, but before the financial statements are authorized for issue, usually March or April, so technically between January and April, it should be current. Okay? But, baguhin natin yung sentence. If the refinancing agreement to reschedule on a long-term basis is completed before, on or before the reporting period, then it is non-current. Why? Because this is an adjusting event. Kasi nangyari yung agreement on and on reporting period, which is December 31, or pasok siya sa let's say 2021 financial statement. So adjusting event siya. Kailangan mo siyang i-record on 2021 books. But if the reporting period happens on January 1, 2022, which is not part of 2021 already, hindi mo na siya kailangan i-reclassify from current to non-current. Kasi, again, the adjusting event happens on after the reporting period, which is January 2022 na. So, you should reflect the change on 2022 books and not on 2021 books. So, ganun siya. Ito, nakalagay pala dito. January 1 siya. However, the obligation is classified still as non-current if the entity expects and has the discretion to refinance it on a long-term basis under the existing loan facility. So meaning, yung loan facility mo na yon is already existing as of the year end, which is December 31. And again, the company expects and has the discretion to refinance it on a long-term basis at the end or before the end of the reporting period, then you can recognize it as non-current liability. But if the discretion is not on the company or nasa creditor yung discretion kung i-refinance man siya on or before the reporting period, it should be current. Kasi hindi sa'yo nakasalalay kung babayaran mo ba siya on a long-term basis. Nakasalalay siya sa creditor. So, ganun siya. Okay, malinaw ba? Any more question? Okay. So, if wala, can we now proceed on chapter 2? Yung mga questionnaires dito, hindi pa natin masagutan, no? Kasi wala pang binibigay na answer key sa akin si Sir Tano. So, hindi ko kabisado yung approach kasi ni pangalan nito. Sino ba itong author na to? Si Milan. So, hindi ko alam yung ano niya. Hindi ko alam. So, ano ba yun? Wait, chapter 2. Ayun, ito ko na. Okay, chapter 2, notes payable. Okay, for a while lang Okay, so let's start. Wait, baguhin ko yung presentation ko. Okay. Okay, so let's start. So notes payable. Notes payable are obligations supported by debtor promissory note. Promissory notes. Yes. The accounting for notes payable is similar to the accounting for notes receivable as discussed in IA1. So I believe na tackle nyo na yung notes receivable, di ba? Tama ba? Sa IA1 or hindi pa? Or bago pa lang? Okay, so na-tackle na, yes. Okay, so na-tackle nyo na. So bale, yung notes receivable na nasa IA1, siya lang yung, how can I say, siya yung creditor's point of view. So meaning, sa point of view ng creditor, it is a notes receivable, di ba? But on IA2, which is yung subject natin ngayon, we will be discussing naman on a point of view of debtor, yung may utang naman. So tuloy tayo. Initial measurement. Notes payable are initially recognized at fair value minus transaction cost. So fair value minus transaction cost. So tuloy natin. Fair value is the price that would be received to sell an asset or paid to transfer a liability in orderly transaction between the market participants at the measurement date. So for measurement purposes, notes payable are classified into the following. First is short-term payable, long-term payable that bears a reasonable interest, long-term that bears no interest, and long-term that bears an unreasonable interest rate. So, mas marami kay Milan. Kay Valix, dalawa lang yan. Short-term pay, tatlo actually. Short-term, which is within 3 months, within 6 months, gano'n lang, due na siya. Long-term is more than a year with interest rate. And the other is long-term that has no interest rate. Yung for, check natin kung ano yung difference nito. But I think, tinutukoy lang rin ito is yung below sa industry average na rate, which is yung legal rate din natin ng interest, which is 12%. 12% for collateralized loan and 14% for non-collateralized. So, check natin. Okay. Short-term payable matures in 1 year or less, while long-term payable matures beyond 1 year. So as we have seen, short-term payable may be equal to its face amount. However, if it is clear that the arrangement effectively constitutes a financing transaction and the imputed rate can be determined with undue cost or effort, the fair value of the short-term payable is equal to its present value. So, ang pinaka-reason kung bakit hindi na natin discount ang short-term payable is napaka-minimal ng difference ng present value niya if you will try to compute it. Okay? So, pwede mo na siyang i-disregard dahil maliit lang siya. So, for the purpose of presentation, fair value of short-term payable is equal to its present value. So, mag-add note tayo. Okay. Ayan. Okay. So, for short-term payable, ito nyo ba? Ikita. Mali ata yung ginamit ko. Uy. Nakikita niyo ba yung pinatype ko? Wala. Tama na. Ayaw nang lumagay. Okay, tuloy na natin. So, short-term, okay, ulit So, for short-term payable, fair value is equal to its present value due to minimal differences in computing yung present value yung fair value ng short-term payables. Okay? So, for long-term payables, the value of a long-term payable that bears a reasonable interest rate is equal to the face amount. So, ang sabi dito, ang fair value daw ng long-term payable that bears a reasonable interest rate is equal to its face amount. So, an interest rate is deemed reasonable if it approximates the market rate and transaction date. So, meaning, yung interest rate daw is deemed reasonable, which is tama yung hula natin kanina, na if it is the same with the market rate at the transaction date, which is sa Pilipinas, yun nga, 12% for collateralized and 14% for non-collateralized. Okay. So next, the fair value of a long-term payable that bears no interest or long-term non-interest bearing payable is equal to the present value of future cash flows on the instrument discounted using an imputed interest rate. So usually yung imputed interest rate is 12% din. Okay. Next, the value of a long-term payable that bears an unreasonable rate is also equal to the present value of the future cash flows on the instrument discounted and imputed interest rate. So other terms for imputed rate is effective interest rate, market rate, or yield rate. So yan yung tatlong term. Actually, 4 na term yan. Kasama na yung imputed rate. So huwag kayo malilito kay nominal rate, stated rate, and coupon rate. Yung tatlo na yun pertains dun sa stated rate nung note, which is yun yung nakalagay sa bond indenture in case of bonds. And for notes payable, yun yung nakalagay sa promissory note. Tawag natin dun is, ano ba yan? Ang tawag natin dun is stated rate, coupon rate, or yung note rate. Yung nakalagay sa promissory note. While if we are talking about the effective interest rate or the imputed rate, it is also called as market rate and yield rate. Okay. So mamaya, mas mag-discuss natin yan. Cash price equivalent. So the fair value of a payable may be measured in relation to the cash price equivalent of the non-cash asset received in exchange for the payable. So instead na bayaran siya by cash, it will be paid using a non-cash consideration. Okay. So in this example, the cash price equivalent is the amount that would have been paid if the transaction was settled outright on a cash basis as opposed to installment or deferred settlement. Okay, so let's see an example. An entity purchased a TV set on 6-month installment basis, so the installment price is 120,000. However, if the TV set is purchased outright in cash, the price would have been 100,000. So the payable is initially recognized at 100,000, which is the cash price of the TV set. The difference of 20,000, which is 120 less 100, will be amortized over the credit term as interest expense using the effective interest method. So, ang tawag natin dito is yung in terms of notes payable, this would be the premium. Okay? Ito yung magiging premium natin kasi mas malaki yung ibabayad natin kumpara dun sa cash price lang niya. Okay, so example 2, the entity purchased goods for 250,000 under a special credit period of 1 year. So in this transaction naman, bibilin mo siya ng 220,000 lang with a credit period of 1 month or with a 5,000 discount for cash basis. So Kung bibili mo raw siya in cash, it is only 220 less 5,000. So it should only be 215. So both the purchase price of 250, which is special credit, and 220 normal credit constitute a financing transaction. So they include consideration for the credit period. So to compute for the cash price equivalent of the goods, i-deduct mo yung normal selling price dun sa kanyang discount. So yun na yung magiging cash price equivalent niya. So that is what we call present value is equal dun sa fair value niya. Okay, so your sa point of view ni debtor, which is yung may utang, ito yung kanyang present value. Okay? Yung 215,000 and yung sa una is 100,000. Yun yung present value. But sa point of view naman ni creditor, which is sa kanya notes receivable ito, this is what he called fair value. Okay? Ito yung fair value niya. Kasi short term lang naman to. Okay, so any more question regarding dito? Okay, so if wala, then tuloy tayo. Subsequent measurement. So for subsequent measurement, notes that are initially measured at face amount are subsequently measured at face amount or the expected settlement amount. So notes payable that are initially measured at present value are subsequently measured at the amortized cost. Okay. So tuloy tayo. Amortized cost is the amount at which the financial asset or financial liability is measured at initial recognition minus the principal repayments plus or minus the cumulative amortization using the effective interest method or any difference between that initial amount and the maturity amount and for financial assets adjusted for any loss allowances. So, yung amortized cost, technically, it only means na kailangan nating i-measure yung notes using the amortization table. Okay? So, ano ba yung amortization table natin? Or the other called effective interest method. Okay? Which is ito siya. The amortized cost is determined using the effective interest method. So, just to show you, para makakita kayo ng uh, actual application ng effective interest method. So, ito yung example niya. Okay. So, this file is ginagamit ko siya sa trabaho kasi nag-amortize kami ng sasakyan. Okay. Okay. So, this is how amortization table looks like. Okay? So, itago na lang natin yung company, pero yan yung company. Kita nyo pala, kakainis. Ayan. So, ang sasakyan is Chili Cool Ray. So, ito yung cost niya, ito yung incidental costs niya, yung total cost, may security deposit, may residual, walang residual value for this car. And ito yung mga incidental cost, which is composed of documentary stamp tax and notaries. So, ito lang yung entitlement and the rest is deducted na sa empleyado. Okay. So, yung effective interest method is ito siya. Okay, kung makikita nyo, meron kaming how many years? 3 years. So, yung period is 36. So, ina-account namin siya per month. Ito yung binabayaran, which is ito yung annual or yung monthly installments natin. Ito yung effective interest na kinocompute namin using this rate, 9% effective rate na is na determined by the bank. Usually si bangko nagbibigay niyan. Ito yung coupon rate. So this is what we call coupon rate, stated rate, uh, interest rate, silent. Yan yun. However, after the recomputation, which is done by us, after considering yung mga residual values, yung mga security deposits, employee share, yung entitlements, ito na yung effective rate niya, 13%. So this is otherwise called effective rate. This is also called imputed rate. Ito yung tinatawag na market or yield rate. Siya. So, yan yung difference ng dalawa. Ito yung stated dun sa contract. And ito naman yung actual rate imputed. Kasi ito na yung actual rate na na-incur natin on a monthly basis, which is computed on a whole contract. Sa buong kontrata siya kino-compute. Okay, so we also have our entries, mga journal entries namin, right of use asset, advances, which is ito yun, and dinideduct sa employee share, ROU, list payable. So for every leases, so example pala siya na lease. Actually, lease. So sa lease, meron tayong dalawang component, which is the list payable and the right of use asset, ROUs. Okay? So later on our discussion, tsaka natin encounter tong leases kapag nasa lease na tayo. But for the sake of discussion ng difference between coupon rate, stated rate, and the effective rate, ito siya. Okay. So, yung buong table na yun, ang tawag pala doon is effective interest method. Okay, so yun yun. That is how it look like. Actually, may example naman dito siguro para makita natin. Pero wala akong nakikita. Anyway, so when a note payable is initially measured at present value or cash price equivalent, the difference between that amount and the face amount is initially recognized as a discount. So as mentioned natin kanina, if mas malaki yung fair value over dun sa, if mas malaki yung present value over dun sa fair value niya, then there is a premium. But if the fair value is higher dun sa present value natin, then it should be a discount. Okay, so mamaya gagawa natin yan ng table. Sana may table na dito para hindi na tayo gagawa. Ba't mukhang wala? Okay, so effective interest method is a method of calculating the amortized cost of a financial asset or a financial liability. Okay, remember, applicable siya both for financial asset and financial liability. In this case, creditors, notes receivable, and debtors, notes payable. And of allocating the interest income or expense over the relevant period. Okay, so summary ng measurements. Type of payable for short-term, face amount or present value. If the transaction clearly constitutes financing, and the imputed rate of interest can be determined without undue or cost effort. Okay, so usually, hindi na natin ito dinidiscount again kasi minimal lang yung difference. So it's either face amount or present value. But usually, we are using face amount lang on practice. Okay. So next, long-term payable with reasonable interest rate. So remember initial measurement lang to. Hindi pa yan yung subsequent. So initial measurement with reasonable rate, face amount or the expected settled amount. But for long-term non-interest bearing note, So always we are using the amortized cost presentation for determination of the present value. Okay, so question sa table na to. Okay, if wala, then tuloy tayo. Okay, so sample, short-term note, 1 million at 12%. So the lender discount it at 12%. So analysis, the note is short-term and effect of discounting is immaterial. Again, irrelevant. So the note is initially measured at face amount, net of the advance interest. So the entries is like this. So hindi mo na siya kailangang idaan pa sa effective interest method kasi nga again the difference is minimal. So hindi naman siya e-effect na masyado malaki since it is already presented within the same year. So hindi mo na siya kailangan talaga yung discount since short term lang siya. Oo nga, short term lang siya. So, ito siya, 1 million times 88%. So, nanggaling yung 88%, that is 100 less yung 12% discount rate. Dito naman yan. So, discount on notes payable, multiply mo lang yung 12% dun sa 1 million, which is the face amount ng ating note. And you have it. Ito na yung entry niya. For the computation of interest expense for the year 2021, so since nag-accrue lang is 6 months, kasi nag-start siya ng July. So, July to December, 6 months. So, 1 million times 12% times 6 out of 12, which is 1 out of 12 din. So, 60,000. Same goes for June 30, 60,000. And by the time ng settlement na notes, you will just settle it on the face amount. Okay. So, for carrying amount naman ng notes, so alam naman natin na ang carrying amount is equal to book value or the amount it is presented on the financial statement, di ba? Familiar ba kayo sa term na to, carrying amount? Okay, so I think familiar. Okay. So, carrying amount or book value nung note is 880,000 as of July 1, 2021, which is the date of the execution of the note payable. I think, saan ba yun? Tama. So, ito yung carrying amount niya. But on December 31, ang carrying amount na lang niya, ang carrying amount na niya is 940,000. Kasi, you already amortize na yung discount on notes payable. And you also recognize interest expense. Kasi na-incur mo na siya. Again, interest is incurred through the passage of time as defined by the PFRS. So, kahit wala kang cash outflow sa, kung makikita nyo, on December 31, wala ka namang actual cash outflow, di ba? Ang nakalagay lang dito is recognition of interest and amortization ng notes payable previously recognized dun sa inception ng note. But you are recording interest, di ba? Because interest is incurred through passage of time. So by June 30, 2022, ang carrying amount na nung note is already 1 million na. Kasi you already amortize na yung buong amount ng discount on notes payable. So at on 2022 instead nung 2021. So using the prevailing rate na 12%, which is the discount rate dito rin, transaction na to, i-discount natin siya using that rate. Okay. So question regarding sa table na to. Any more question? Okay, so far walang tanong. So, ito yung mga notes sa problem na 'to. So, just read it na lang. So, for case 2, installment. So, at dito naman, installment siya. So, you will just, check lang dito yung allocation ng interest. So, interest is based dun sa principal amount. So, interest will always follow yung kanyang principal. So, huwag kayong magre-recognize ng interest on top nung current note payable balance natin. So, at September 30, nagkaroon siya ng initial payment ng notes payable amounting to 250,000. So, at December 31, at October 2021, ang outstanding balance na lang ng note should be 750,000. So, from October 1 until December 31, ang mag-i-incur na lang ng interest is yung 750,000 and not 1 million anymore. So, yun lang yung difference niya sa single date maturity against the installment. Okay, so fractions are derived from the outstanding balances of the note. So, ito lang yan. 1 million out of 2.5 million. Ito yun. 1 over 2.5. 750,000 over 2.5 million. Ito yun. So, ginawan lang yan ng fraction. So, for carrying amounts, ipa-plot nyo lang yung notes payable and yung discount on notes payable dito. Dito lang. So, ayan. Identified mo na kung alin dyan yung carrying amount niya at any given time. Okay, so 12 na agad. Kailang page pa lang tayo. So, okay. So, already 12 na. So, balik kayo ng 12:30. Take your lunch muna. Ano? Okay, see you later. Bye-bye.
Thank you po.
Okay, thank you.
Thank you po.
Thank you
Thank you
po.
po.
Thank you po.